Is now a good time to invest? That's a question that I'm asked fairly regularly, particularly during times that we're going through right now, where the stock markets are falling and there's a lot of uncertainty, a lot of things going on in the world that's causing a lot of doubt and concern. At the moment, as I record this in May 2022, we've got the Ukraine crisis and the cost of living crisis globally, which means the global stock markets have fallen since the start of 2022. So we've got two competing decisions that people are faced with. We've got, on the one hand, that money is sitting in a bank is losing money in real terms, but equally the stock markets are down and people don't know what to do with their money. They want to get a better return, but they don't want to risk it. So when people ask about whether it's a good time to invest, the first decision to think about, the question to ask yourself is, what's the purpose of your money? If you've got money that you know you're going to need in the short term, at least as far out as 3 to 5 years, it might be because you've got known costs coming up. You might have to repay a mortgage, or you want to give money to the children, or spend money on the house, or buy a new car, whatever it might be. You don't want to put that money into the stock markets and see that it's going to lose value and be worth less when you come to call on it. Equally, you want to have money that's available to you in the event of an emergency to cover those unseen costs, whether it's a period out of work where you lose your earnings. It might be medical bills that need to be paid for, a hole in the roof, a new car, a new boiler, whatever it might be. That's money that you need available, and you don't want to expose to short-term losses in the investment markets. However, if you've got money that you don't need for at least 3 to 5 years and longer, and you're willing to expose it to some short-term risks in the expectation that over the long term it'll grow, then investing in the stock markets is the best place for it, because it's the most reliable way to get a long-term return on the inflation. But because of the risk and reward relationship, in other words, if you want to get a higher return on your money, you have to take risk. Then you need to accept this short-term uncertainty. And if you read the news, there will never be a good time to invest, because there's always something going on. At the moment, it's Ukraine and the cost of living crisis. Previously, it's been COVID, and it's been Brexit, and there's been wars and great financial crisis. There's always some doubt that means stock markets might be volatile in the short term. But if you look over the long enough time period, you'll see that more often than not, on a calendar year basis, stock markets are higher at the end of the year than they are at the start, approximately 5 years and 7. But during those years, there's typically a period where, if we look at the FTSE All-Share as an average, as an example, the average loss in a calendar year is 14%. So the FTSE All-Share on average is down 14% in any calendar year. But by the end of the year, more often than not, it recovers. And if you think, well, I'll just hold off and wait for this current uncertainty to pass and then I'll invest, what you'll find is that the markets haven't waited for you and they've recovered. Stock markets are forward looking. They're looking at trying to get a positive return over a long term, and they react to news accordingly. If bad news is on the agenda, then they'll fall, but they'll look forward to reasons why that bad news might get worse, which means they'll fall further. But equally, there might be news that comes in that means the stock markets might rise over a long term. Maybe today's bad news suddenly isn't as bad as expected, and stock markets recover, and they will not wait for you for your money to come in. So you might look back in a year's time and the stock market's recovered and you missed out on that period of growth. And often what happens after the big falls is we get the quick recoveries, and so you want to be on that ride when they happen. Stock markets, when they fall, is really like buying the great companies of the world in the sales. Now, when we've got the high street sales and the online sales, people rush in to bag a bargain and get things that they want or need cheaper. the way to look at stock markets as a sale is that you're investing in the great companies of the world at a discounted price, at a sale price. So you can buy and take ownership in the likes of Amazon, Apple, Google, Facebook, all the big manufacturers and the retail and services providers of the world at a lower price. So you will be rewarded for embracing that uncertainty, but only with money that you can afford to invest and forget about, as I said, for at least 3 to 5 years. So first and foremost, think about what you need for that money, the purpose of the money, and then you can think about whether it's a good time for you to invest now or not. I hope that helps. If you've got any questions, drop me a line.